Hello and welcome to Business Daily on Trust Television, and we are set to keep you updated on happenings and developments in the world of business, finance, investment and the stock market. I am your host, Christiana Amodu-Otinya. Thank you for always making a date with us on the program. First, we'll kickstart with the headlines for today. We begin from what the ratings agency Moody's is saying. Moody's downgrade, the motion shocking, concerns being addressed. That's coming from the federal government of Nigeria. And now in the oil and gas sector, Kaduna refinery repairs, the NNPC budgets $741 million, targets 60% capacity in the year 2024. You get more updates in the business roundup segment of the program. I'll take a short breather. When we come back, we go straight into the stock market. Please stay with us. Welcome back. Now let's get straight into the stock market and see what colors of arrows we have in the stock market. Of course, we begin from the local burs in Nigeria, in Customs Street, in Nigeria's commercial hub, Lagos State, talking about the Nigeria Exchange. The Nigeria Exchange climbed 0.93% for the penultimate trade of the week, and the benchmark oil share index settled at 53,998.12. For the activity chart, a total volume of 2.8 billion shares valued at 8.06 billion naira changed hands in 3,940 transactions on the floor of the local burs. The equity cap settled at 29.13 trillion naira. So we are seeing that the green trend is continuing in the Nigeria stock market, and market watchers have said they expect the local burs here back in Nigeria to end the week in positive note. Going over now to other African bourses, beginning from Johannesburg, of course, Africa's largest bourse. So it's a close in the red for these exchanges. For in Johannesburg, 79,531, down 0.34%, and in Ghana, 2,402, shedding 0.41% there. So both are largely in the negative zone. Now, over in Wall Street, stock futures are down after several high-profile earnings misses cast doubt on the recent market rally, although we are seeing that the market started positively in the green. But for Friday's open, of course, this is largely what happened in the market for penultimate trade on Thursday. For opening on Friday, the U.S. markets are not opened yet. The U.S. market is expected to open in Wall Street at about 2:30 p.m. Nigerian time. So a lot of earnings that have come in have mixed expectations. I remember these earnings reports from companies really gives a picture of the health of the U.S. economy. And we are seeing the big tech companies especially missing their targets in terms of earnings, and that is sending jitters into the market. Let's go over now to the Eurozone. European markets retreated Friday as investors digest key central bank decisions, economic data and corporate earnings. So it's a full plate, especially for investors in the stock market. So we have more in the negative over the positive. Just the FTSE 100 in the UK here in positive zone, 0.05% at 7,824.12. It's also good for us to state here now that the European Central Bank hiked interest rates by 50 basis points and signaled a further hike in the same scale in the month of March, vowing to stay the course as it looks to reel in inflation. The Bank of England, on the other hand, also hiked rates by half of a percentage point as expected, but dropped the word forcefully from its language on future hiking. So we are saying that central bankers are not planning to step on the brakes anytime soon with the rate hikes. The plan is to bring inflation to as low as possible, although we are seeing inflation cooling down in different regions across the world. But central banks are saying we want to consolidate on the gains that we are experiencing, and therefore more rate hikes are expected in coming months. In the Asia-Pacific region, stocks in Asia-Pacific traded mixed Friday as shares of Adani Enterprises plunged and last traded 15% lower, continuing a sell-off triggered by allegations raised by short seller firm Hindenburg. So we are seeing the Nikkei 225 in Japan is up 0.39%. In mainland China, the Shanghai is down 0.68%. But in the South Korean Strait, the Kospi is up 0.47%. So what's happening with Adani Group around issues around allegations being raised is affecting the sentiment, especially in India. We are seeing that affecting sentiments. The Nifty, the Sensex, all those are being affected by what's happening with the Adani Group. Adani Group founder and chairman Gautam Adani's net worth fell further overnight and now sits at number 21 on the Bloomberg's Billionaire Index. He lost a total of $59.2 billion in net worth yet to date to $63.1 billion as of Thursday's market close. Interesting what allegations can really do to the net worth of one of the biggest billionaires in the world. Now let's go over to the commodities market zone and see what's happening. So we are seeing the bears are dominating the market predominantly here. For the commodities chart, we have a red arrow for Brent crude, a red arrow for silver, a red arrow for wheat, and also a red arrow for cocoa, down 0.35%. For oil prices are still maintaining modest gains on Friday, but we're heading for a second straight week of losses as the market looked for more signs of a strong recovery in fuel demand in China to offset looming slumps in the major economies. Remember, the ban on the Russian oil is supposed to come in also in the month of the first few days of February, and that's also been monitored in the Straits. $81.75 per barrel. For the bullion, the yellow metal gold is at $1,913 in the green zone, up 0.05%. Gold prices are steady in as traders digested rate hike remarks from global central banks, but the metal was set for its first weekly drop in 7 weeks amid a strong dollar. Remember, there's an inverse relationship between the bullion, that's the yellow metal gold, and the dollar. When there's a strong dollar, we see that the gold prices are softer. However, when the dollar is a little bit weak, a lot of investors run to the safe haven asset gold to ensure that their monies do not depreciate in value. Now let's go over to the cryptocurrency market and see what is happening in the crypto watch segment. $23,380 for the largest digital token in the world, Bitcoin, 0.2% lower. For Ethereum, $1,638.26, up 0.13%. And for the Binance coin, $323.01, shedding 0.27% there. Those are the numbers we have for you on the program today. Of course, it's our tradition to bring you these numbers and also try to give you the story behind the numbers. Why do we have reds or why do we have greens in the market? Now, let's bring you a roundup of business stories. Take a listen.
Minister of Finance, Budget and National Planning, Zainab Ahmed, says she is shocked by the recent downgrade of Nigeria's credit rating by Moody's Investor Service, a US-based rating agency. Last weekend, Moody's had downgraded Nigeria's credit rating from B3 to CAA1, saying the government's fiscal and debt position was expected to continue to deteriorate. Following Moody's downgrade, Nigeria's government bonds were on Monday dumped at its fastest pace in 3 months. Speaking with journalists in Abuja on Thursday, Ahmed said the downgrade was surprising. She explained that despite presenting evidence of the government's efforts to stabilize the economy, the rating did not reflect a proper understanding of the domestic economy. Ahmed encouraged Nigerians to look forward to S&P's rating due for release on Friday, adding that it is expected to present a better outlook for Nigeria. The planned repair of the Kaduna Refining and Petrochemical Company KRPC Limited by the state oil firm Nigerian National Petroleum Company NNPC Limited is expected to restore it to a minimum of 60% of its nameplate capacity by the fourth quarter of 2024. According to the Nigerian National Petroleum Company Limited, the project will be in 3 work packages as a maintenance services contract by Daewoo E&C Nigeria Limited at an estimated maximum cost ceiling of $740.7 million for a duration of 21 months. Downstream Executive Vice President of NNPCL Adeyemi Adetunji said at the contract signing ceremony that the quick fix strategy guarantees the fastest route to restreaming the Warri Refining and Petrochemicals Company Limited (WRPC) and the Kaduna Refining and Petrochemical Limited for in-country production of refined petroleum products. Adetunji said the NNPC is using a combination of internally generated revenue and third-party financing to execute the refinery's repairs.
There you have it, a roundup of business stories. On today's edition of the program, we will be focusing on the Ministry of Finance Incorporated that was recently inaugurated by President Muhammadu Buhari. It's supposed to bring about a reform in investments in Nigeria. And I'll be joined by Dr. Sambo Bello Ngawa. He's joining us virtually from Kaduna State. He will be giving perspective to some of these issues. Now, the MOFI is expected to deliver on its mandate and grow assets under management from 18 trillion naira to a whopping 100 trillion naira in the next 10 years. Now, there's been a lot of conversation around how feasible this target is, especially for the Ministry of Finance Incorporated. You'll be hearing from my guests shortly on what to expect and really the intricacies around this announcement and of the inauguration of the board by President Muhammadu Buhari. Promises to be insightful. Don't go anywhere. We'll be back after this short break, please.
TV, documenting the Nigerian story.
Welcome back and thank you for still staying there with us on the program. If you're just joining in, this is Business Daily coming to you live from Trust Television. And our focus on the program for the conversation segment today would be on the Ministry of Finance Incorporated, that was inaugurated by President Muhammadu Buhari. We'll be looking at the issues, especially as it relates to this particular development that have come up. I'm being joined by Dr. Sambo Bello Ngawa. He's joining us virtually from Kaduna State. He's a development economist. Welcome to the program, Doctor.
Hello, thank you very much. Good morning, everyone.
Let's begin by giving a background. What are your thoughts on the Ministry of Finance Incorporated? A lot has been said on how this is expected to bring about a transformation into the system with regards to investment and so much more. Tell us what you think.
Yes, you know, the Ministry of Finance Incorporated is a legal entity that was long time ago created by an act in 1959, even before Nigerian independence. And it is meant to serve as a special purpose vehicle to create a legal identity within government structure, to provide legal platform by which government can interact with the investment and world, such that partners in development processes and investment issues in exchange of such kind of transactions can identify a legal entity with which to transact such business that represents government. So the MOFI and the inauguration that the president has undertaken on Wednesday of the MOFI is an indication of a new vigor that the government is placing on how its assets, its investments, and its rights, a new focus on how to manage that and make them more operational, more functional, and more value producing. If you notice quite clearly, the president has charged the new MOFI, so to speak, to actually enlarge it from the 18 trillion naira portfolio size to about 100 trillion naira by their 2033. Now, what that implies is that the new body, that is the new MOFI, has to actually remobilize all resources and capacities and competencies to be able to generate that kind of value. Hitherto, the tradition has been, well, government has assets, government has investments, but the lackluster performance of those assets, the underperformance of those assets are now being brought to question. More especially that this time around, we have a lot of fiscal challenges. There are a lot of, for instance, the debt issue, with which much of this debt has been used to invest in new assets and in the maintenance of old assets. Now, if these assets are left to be managed and operated as business as usual, where they don't actually produce back value to even underwrite and pay back some of these kind of liabilities that government incurs in the course of their placement, then it continues to undermine the performance of the entire national economy. But with this new focus now, the government is trying to say, look, let's re-operationalize our assets and our investments and our rights in those issues, and let's make them more functional and more productive so that they actually generate value, contribute to revenue and cash flow, so that the government can be able to not only sustain them through better maintenance and operationalization, but also can be able to exact more accountability from the agencies and institutions under whom they are supposed to be in charge. So government is trying to exact more responsibility and more accountability on the use and operation and management of those assets.
Dr. Ngawa, I also want to get your thoughts, because I was doing some research since after the announcement by President Muhammadu Buhari, and I was seeing some mixed reactions have also trailed the announcement, talking about the elections is just a few days away and we're having this announcement coming. Government ideally is supposed to be a continuum. It's not supposed to be broken. Policies are supposed to be carried on. Do you see probably a shift in power affecting some of the targets that have been set by the president to those in charge, the board in charge of the MOFI? Do you see the transition in government affecting any of that 100 trillion naira in 10 years and basically bringing about a reform in the system?
Yeah, well, as we normally say, it's better late than never. And the fact that the vision is relatively medium to longer term vision of up to 2033, it actually presupposes there is a continuation of governance and interest in these kind of issues. And to my thinking, whatever government comes to succeed this one will certainly be interested in how to go about improving the efficiency of the use of the national asset stock. Also to improve the productivity of those kind of assets and investments. And to also exert accountability on the operators of those assets agencies and institutions that are supposed to take care of those assets and to make sure that they function, they provide the value addition that are expected for the economy, and that they are sustainable. So they need to be able to generate enough revenues and cash flow to be able to sustain these requirements. So whatever government that comes into succession, to my mind, it will be too unlikely for it to jettison what has been organized. This should have come much, much earlier. That is true. But then it is never. It's better always late than never. We have what this imports is that the government is now focusing more on how to make the national investment, national assets more efficient, more functional, more operational, more value contributing to the national objectives of maintaining sustainable and productive economy. And by the virtue of the constitution of the different bodies, that is the governing council, the board of the MOFI, and then the executive management. Yeah. From the structure, you can see that it is the president himself that is going to be chairing the governing council, co-chaired by the Minister of Finance and Economic Planning. And at the board level, they are highly experienced economists and professionals, chaired by a person like Dr. Shamsuddin Usman, yes. Supported by people like Dr. Mohamed Sagagi, and such kind of reputable economists that actually have good grasp of the issues around the economic challenges of the country. At the executive management level also, there are professionals, a bunch of professionals. So a kind of benchmark has been set up for whatever succeeding government that comes onto the scene to be able to continue. And it is something that is going to open up opportunities for a better performance of governance in terms of the down the line, the expected value addition that is going to precipitate to the entire economy by way of opening up investor confidence, both within and foreign investors, when they look at how efficiently these kind of facilities, these kind of investments, and the legality of going into business transactions with government itself, so that the impunity of governance or government is removed by now creating a legal entity that can sue and can be sued if there's any issue that arises from a relationship that can be built. So investor confidence will also be built, and therefore we should expect to see more interest in investor appetite in the Nigerian economy. There's more seriousness, there's more efficiency, there's more focus on the utilization and extraction of value from what has been invested.
Doctor, before I let you go quickly, 100 trillion naira in 10 years, is that a tall order, or are you optimistic that that is achievable?
Well, it sounds so, but I tell you, if you look at the, so to speak, stock of assets that have been, the tradition in government is that investments from government are normally required as what they call social investments, social benefits. Yeah. But any social benefit, as monetary economists will tell us, that unless it can pay for itself, unless it can generate value and revenue to even at least maintain itself and then create surplus to actually multiply it and expand it, it's not worth it. So nilly-willy, even social investments, social benefits can be translated into monetary value, if you like, because you can only you need to have resources to be able to at least even maintain these assets. Look at the assets that we have across the country: the highways, the ports, the airports, the railways, all the kinds of assets and investments that government has made over years that have been laid fallow, generating nothing virtually. So you begin to wonder, if you do not focus and begin to make them more functional and therefore more responsible to pay back for themselves, How do we even maintain them and continue to use them sustainably? So this is a new focus that everybody should actually welcome, especially the business environment, because it has great direct impact on the investment and the business environment that will be created by the functionality of the assets themselves. Now, the new MOFI, therefore, will be responsible to ensure that these assets are actually functional, productive, and actually generating revenue and cash flows to maintain themselves and to provide expansion and create the confidence with which everybody can relate with a body called government through the MOFI.
Thank you so much, Dr. Sambu Bello Ngawa. He joins us from Kaduna State, development economist, to speak to the Ministry of Finance Incorporated. Thank you for your time, Doctor.
Thank you very much for having me.
Enjoy the rest of your day. And that's where we draw the curtains for the program today. Strong optimism there to end the program today, looking at the investment climate in Nigeria. And it's really time, the best time to bring in those investments is really now, to ensure that the Nigerian economy becomes very robust. And it trickles down, of course, to Nigerians across board. Don't forget, you can get a catch up on all updates on our social media platforms, on Facebook, on Twitter, on Instagram, on YouTube. Trust us to get your trusted information and news making the rounds in the polity as they break. So go to YouTube, click the subscribe button so you don't get to miss out. I am Christiana Amodu Otinya. Thank you always for investing your time with me. Continue to stay safe. Bye for now.